Good day, Toronto. Welcome to Street Talk with Riyaz Rauf. As usual, today I am having a guest here, a very eminent guest. He is Varan Karunanantham from iConnect Mortgage. Varan is one of the most prominent mortgage brokers in our community, and also throughout Canada, he is ranked among the 75th in the mortgage brokerages and doing well and very much integrated with the community and quite helpful not only in his mortgage activities but also on the social side of life. So today I am here to speak to you with regard to certain developments in mortgages and also to let you know about what are the challenges that we face now and what are the challenges ahead and the bigger opportunities that those challenges bring. Hi, Varan.
Hey, nice to thank you for having me.
Always a pleasure, Varan. It's meeting you formally today. We always meet casually or with clients.
That's right.
So what I would like to do is some of my clients want to know, say, in December this year or from the 1st of January, there is going to be a ban on foreigners buying properties in Canada for a period of 2 years. On the other hand, there is also exception to that rule because if they are buying, they could buy in the event they want to live there or if their siblings or children are going to live there, not to buy and as an income property to lease. So most people would be wanting to buy. And what are the opportunities available for them, Varan, in our community? There are a lot of people who want to come over and do that.
So there's a lot of opportunities. Actually, these opportunities are through the major banks. So number one, actually banks also have a restriction of you cannot buy the properties for an investment purpose. So you need to buy it as a second home. So you cannot own any of the properties. So they have a maximum of 2 properties you can own.
Okay.
And they will not use any rental income to qualify. So for example, let's say you have a client who is having a full-time employment in Dubai and they have children going to school in University of Toronto, they want to buy a condo, definitely they can purchase a condo with a 35% down payment and they need to have a 12 months mortgage payment, principal and interest plus the taxes in the bank account. And they will be qualified with the foreign income. So let's say, for example, we will ask a pay stubs and job letter and a tax returns from their home country. And so this can applicable to 2 different kind of people. Some of them, so Canadians who are working abroad, or someone who's completely from abroad.
Okay.
But someone who's completely abroad don't have any ties to Canada, they have to be aware of paying the 15% land transfer tax.
Yeah. So that land transfer tax is something that they have to pay, and now it's 20% in Toronto. They increased it in the last budget, provincial budget.
Okay.
So when they pay that 20%, there is also another clause where in the event in the future date when they become Canadian residents, they have the ability to get it back.
Absolutely. Just to add on to that, I actually had a client that just came to my mind. The client is actually, the daughter is going to school and the family is moving here. They don't have a 35% down, but what they have done is you can actually get a private financing with the 20% down or 20 or 25% down. Okay. So it's quite expensive compared to you going through financing through a traditional bank, but at the end of the day, you know the prices has come down. They want to leverage when the prices are lower, and so they don't have a capital. And even if you have a capital, you can have it as a safety net. You can still buy with the 20% down, but those financing will be not through the major banks. It'll be through some alternate lenders.
Yeah. So what I would suggest for the audience who are listening is, so we opened up this to give you an idea that it is possible. So the best thing is scenarios will change from one to the other. And at the end of the program, we will share Varan's details and also phone number. And it's best to reach out to him and give a shout. If you want, you can reach out to me. I'll pass on messages to him and we can make the connections. Now that we are a bit on the foreign buyer side, I would also like to use this opportunity to check with Varan. Now, we have a lot of immigrants coming in. At this point in time, there's a huge number of immigrants that are coming in this year and from parts of the world that we are quite familiar with. Yep. Of course, there are some immigrants who come with a good chunk of funds that are available, and there are some who comes without funds. And they struggle and they always want to buy a home. My question is two parts. The first one, what should they not do if they intend buying a property either immediately or in the next 3 years?
So number one, don't rack up the credits. Have a credit cards, have a line of credit, establish a credit, but don't rack up the credit card. Don't miss payments. Establish a credit. Have more facilities, credit facilities, and make the payments on time and build a credit score. And number two, don't get into the big debt obligations. Number one, it's a car payment. You know, the finance rate has gone up. So $500 car payment is at $800 right now. So don't get into the car payment. Try to navigate through without having a car. Just wait to get into the home ownership. If you're going to planning to buy a home, prioritize that. And having a credit is also not a bad thing, but don't abuse the credit. The other thing you also need to work on, like for a new immigrants, the banks make an exception for not having an established credit. Say, for example, someone who is in the country for 6 months, but they have a great job. Their income can qualify, but they don't have an established Canadian credit history. But the banks will overlook, the insurers will overlook not having established credit because they are new to the country. They may ask such as credit history from a country they come from.
Okay.
So, because Equifax is everywhere. You can actually have an established credit history from Dubai, for an example, or different part of the world. You can have a credit report. And the other thing they look for, you know, you've been here for the last 6 to 12 months. Can you give us a reference letter from your landlord that you pay the rent on time? Or reference letter from an insurance company, the car insurance you had, you never missed a payment. So those are the things comes in handy to mitigate that you don't have an established credit, but you have some kind of proof that you had a good track record.
So another thing that I want to ask is, because I have been hearing this and I've been talking to some of my clients also, but I want to know it factually. If you can say for example, the best way to build up your credit is, it doesn't matter having more than 1 or 2 credit cards, but it's the revolving credit should always be less than 35% of the allowed limitation.
Absolutely. So there's a lot of misconception. You can have a perfect, you can have a $10,000 limit, and you have a $9,000 balance or $8,000 balance. Even though you're making the payment on time, that can bring the score down. So having a balance less than 50% of the limit is always help you to establish.
So in other words, you can always use one of the cards for emergency for 50% and the other card for 50% rather than racking up 100% on one card.
And sometimes you end up in having a cashback offers comes in, so they will try to write a check for 1% interest rate or like a 0.9, and they try to leverage that. Stay away from those things.
Okay. And also another thing that I've come across, I'm hearing, I have seen this a lot last year, in the last 2 years, is there are some new immigrants, when they come in, when they even go and rent a place, they go to some of the furniture shops and appliance shops and buy furniture and appliances even for the rental property, and the best of TVs, best of furniture, and they take it on the program where no payments due for the next 2 years.
Yeah.
But then that also affects your borrowable limit, because this commitment is when it comes to buying a home.
Yeah, it's a liability.
It's a liability.
Yeah.
Okay. So Varan, another thing, now that we touched on the foreigners buying and facilitating them, the second one is what the new immigrants should not be doing, or anybody who wants to buy a house should not do, basically those two factors.
Yeah.
Now I would like to know that as new immigrants, when they come in, what opportunities are there for them if they want to become a homeowner in terms of back facilities, whether it is done now or in a year's time. The reason I'm asking you is, the fact is, when you go to a particular bank, that bank has a particular policy for new immigrants.
Yep.
When you go to another bank, they have a different policy. Now, the advantage you have is you work with almost all these banks and also lenders. So in other words, you become a one-stop shop. And I'm sure you know about everybody's offers that are available as of today.
Yeah.
So would you like to explain that to us?
Yeah. So when it's come to new immigrant, if you are putting less than 20% down, the guideline is pretty much similar across the board. But it's different when how the lenders look at the income. So, for example, every lender has a different way of looking at the income and a different way of making an exception. And also the other example is some lenders actually look at the limit on the revolving debts you have and they will consider as a liability. Some lenders, they only look at the balance. Say for example, you can have 3 credit cards with a $10,000 each credit limit, but you don't have a balance on them. It will work. Some lenders will say, okay, you have a liability, you may not qualify. The other lender will say, you don't have any balance, now you can qualify for a larger amount. So we can kind of navigate through which lender will be the best option for it, because that's a big thing as well. But when you don't have a 20% down, when you do have a 20% down, it's open up a floodgates. So you have banks. So let's say, for example, a bank A may approve you for a $500,000 mortgage. The bank B will approve you for $575,000 mortgage. If you ask me why, because their risk tolerance is different than a bank A.
Correct.
And how they look at the exception to the GDS and TDS, like a gross servicing limits are different. And the other option is we have access to a lot of B lenders.
Okay.
So that's another topic, subject. But the thing is, B lenders, sometimes you may not qualify through the bank, but the B lender will get you to get a foot on the door.
Okay.
So you may have to go with them for 1 year, establish a credit, or maybe you are on a contract job or you are an IT consultant, you may not able to have a established income to get qualified for a bank, but at least you are getting a foot on the door.
Yeah, because I have a case in point, because it's very easy when I share it with you. You might be able to explain beyond that. When I say we had a client who bought about 2.5 years ago, bought a property in Oshawa, a 1-year-old freehold townhouse for $470,000, and his down payment money was only $29,000.
Yeah.
Because he was able to put 5% down. Because not many people understand in today's market, that there a lot is being spoken and written and argued and debated about the market. It's a fact. Yes, if a property was valued around February at 1.2 million, that property today is around close to 950,000.
That's right.
But that opens up a huge opportunity, because even if that property is 999,000, you can buy that property with 75,000 down payment.
That is correct.
Whereas 6 months ago, you wanted 240,000 down payment to buy that house.
Where you need 20% down for a purchase of $1 million.
How do you see that, and how do you come across a lot of these days?
We are not seeing that. I think we are going to start seeing that, because it's open up a lot of opportunity for a first-time buyer. So if you have a strong income, because we see clients in 2 different aspects, right? Someone who is strong with the down payment, but they are not strong with an income.
Correct.
Then we have clients who are young professionals, they're strong with an income, they don't have a down payment. So this is going to be open up a lot of opportunity for clients who have strong income to get into this kind of market.
Okay. Say another thing I would like to check with you, Varan, is later today I'm doing another presentation on move up properties. So I'm just connecting probably what's coming on that video here. I'm giving an example of, say for example, somebody who had a house for 1.2 million 6 months ago. Today's worth is only 1 million.
Mm-hmm.
Now the question is, his dream is to buy a 4-bedroom with 2-car garage with a basement, and that was 1.6 million then, and he could not buy. But now that property has come down to 1.2 million.
Mm-hmm.
Now, what if this gentleman sells his 1.2 million property to $1 million, take a notional loss of 200,000, and
I wouldn't say it's a loss, because he's gaining on the other side of it.
Correct. And what if he does nothing but port his mortgage to this property?
So he has a 20% down. So what you're saying is he has a 20% down.
Yeah.
So absolutely he can do that. So as long as he can qualify with the lender who they're with, so they don't need to pay any penalty to break the mortgage.
Correct.
So let's say 4 years, like 1 year is going to the mortgage. So he can put the same rate if he's on a fixed rate. So keep in mind, only the fixed rate mortgages are portable. Variables are not portable.
Correct.
So he can put the same mortgage to another property and have exactly the same payment.
So those are the opportunity, because I know we are going through a challenging time and the good days have begun, and market has been robust, and you have been telling me what you have been going through in office, working late into the mortgages these days, and we have seen it. And I think, Varan, we'll catch up on another note another episode. At this point in time, thank you so much for sharing your time, experience, and spending all your energy on us. Varan, please, can we have your contact number for people who want to reach out to you?
Sure. My number here is 905-999-7193.
He has an office in Scarborough. He has one in Whitby, and he is also, like the question, if somebody is in Montreal, can he serve? Absolutely,
Zoom.
yes. Right?
Zoom.
Okay. Guys, just to let you know, I'm a realtor. I operate in Toronto, and my philosophy is keep on investing in homes. Do not sell homes. That's my philosophy. However, if you have to sell your home for whatever reason, then please come and speak to me, and I will always ask you, give me 2 reasons why you want to sell a home, because I am comfortable in advising you to keep the home and buy another home, and Varan will always help me to get you to that goal. So please, it's not the best thing to sell a house, but if you want to sell a house, please let me know and we will take care of it. Riyaz Rauf, a household name. Thank you for investing your time with us. It's extremely important to understand that I am giving my opinions here as a realtor and an investor, serving myself, my family, and my friends. It's also important to understand, while talking about real estate, obviously we will be talking about legal side, finances, and taxes. However, I am not an expert on those, and I urge you to seek expert advice when it comes to those 3 matters.